Friday, October 15th, 2021, Monaco 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank all of you another time for all your interest in what I have to say, for all the interest in this channel. It's become like a community. We've just gone over 56,000 subscribers. Some of you, of course, are new to the channel. Some of you have been with the channel since almost the beginning in late 2015. Thanks again. Hopefully we will get to 100,000 a bit quicker. Who knows? But today, I'd like to talk a little bit about sentiment in the markets. And two of the biggest sentiments or emotions in the market are fear and greed. And greed, of course, is reflected a lot in blow-off tops, in bull markets, the last phase of a bull market, like you had at the dot-com bubble, like you had in '08, and like some people might argue we're having now in the NASDAQ, in the S&P, in the Dow. And you would think that fear would be related to a bear market. And for the stock market and the bond market, yes, it is. Investors get rid of their stocks, bonds, and yes, there is fear in the market, and the drop is really sharp, like we had last year, an almost 38% drop in the stock market in a matter of weeks. That was a fear right there. And it was fear of economic collapse, fear of disease. That's what it was reported as, of course. You might have some other ideas. But fear can also be related to bull markets. And you'd be surprised, I guess, and I understand that, but it can be related to a bull market in commodities. And the reason for that is that a massive bull market in commodities based on fear, not on greed, is a reflection of a collapsing currency. It's a reflection of war. It's a reflection of societal breakdown. That's usually what a major or almost a parabolic rise in commodities is portrayed as. And the reason why I'm talking about that is because there's a very good analyst on Twitter, and he's also got his own website. It's called Grady.com, Grady Trading. He's based out of Sweden. He portrays himself as a full-time commodities companies investor trader, and he's got 33,000 followers on Twitter. And the other day he tweeted this out. Well, I think it was yesterday actually. Are you on board the commodities bull brackets ET bullet train yet? If not, you should run to catch it, as it is just in second gear still. As I have posted for 2 years now, it is all coming together for the greatest commodities bull market ever seen. And I agree with him. And I replied to his tweet. I said, this bull market in commodities will reflect fear. And I put in parentheses, currency collapse, hunger, war, etc. instead of greed. And they can be even more spectacular, I think. And I got 42 likes from that reply, which is quite a bit for me on Twitter. Didn't get any comments, but I'll just show you a normal commodities bull market, because you might think, oh, they're all like based on fear, commodities bull markets. But no, you can see here that from the beginning of the century, the CRB was in a commodities bull market, and it topped basically around the time of when we had the '08 crisis back in the summer of 2008 when everything started unraveling. And at the time, we didn't see commodities actually go up. There was no fear in commodities in the sense that people bought commodities because they wanted to get out of everything else. And they were concerned about currency collapse. And as you can see, commodities dropped. But this time, though, I think it's different because the world economies, as I've said several times in the last few months since this summer, they're unraveling. It doesn't matter if you think it was planned or they're doing it on purpose. The fact of the matter is that it is. And the fact of the matter is that we have created so much debt that people are starting to lose faith and confidence. And that's why we're starting to see not just labor shortages, we start to hearing about strikes, because people are not earning enough to pay for their living. The cost of living is going up. And that's why you're having also all these electricity companies collapse in the UK. You've got the shipping all screwed up around the world. The only thing, of course, that's going right now, where the money is in the banking system. And that's pretty much a reflection, I think, of currency collapse. And you might think, how can banks do well in a currency collapse or in the beginnings of a currency collapse? Well, you just look at countries like Zimbabwe, Venezuela, even Brazil. I remember in the 80s where we're going into hyperinflation. The bankers do very well because there's a huge supply of money and credit. They're trying to keep it going, and the bankers always skim off a little bit of that credit. And that's why we had great results for JP Morgan and all the other big banks like Morgan Stanley. Is it because they're really clever and the economy is doing well? I would say not. It's just that they control the money supply through the Federal Reserve, a private central bank. And I saw that James Gorman, for example, the CEO of Morgan Stanley, he's on the advisory board for the New York Fed, and he came out and said, yeah, we've got too much free money now. The Fed needs to pare it back. It's becoming too obvious that we're raping and pillaging the world. That's what James Gorman said. He didn't actually say what I said, but he might as well have said that. So I have a feeling that this commodities bull market is going to be one based on fear, and they are the most spectacular. I think they're based on everything economically, politically, socially unraveling, and especially the fiat currency. I guess the last time we had that was in the late 70s. And that's why gold and silver went up so much in a matter of weeks or months. In late 79, early 1980, some people attribute it to the Hunt brothers, but I think they were just a symptom of this fear trade. Don't forget, the Hunt brothers started accumulating silver in the early 70s because they could see the writing on the wall back then. And how do you participate? Well, I'm not here to give you advice, but just do your homework. Yeah, I mean, nowadays you have to be really not looking to do it if you can't do it, because there's so much information on the web. Maybe go and look at his website, grady.com. I have never spoken to the guy, so I'm not trying to promote grady.com, but I thought that comment was interesting that he made yesterday. And of course, gold and silver are going to be probably the biggest beneficiaries of this. They're still warming up. I think silver is a spring that's coiling many times over. If you look at the weekly chart going back, 18 months or maybe just over a year. It's a coiling spring. Gold as well, if you look at the 10-year chart and the teacup that we're forming, that's a very bullish formation. We just need to be patient. And yes, it will be a world that we're already seeing of shortages, of higher prices, of going without some of the things, some of the luxuries or stuff that we usually usually can get, let's say for Christmas. It will be first world problems, but it will also be us becoming more like the third world, like Latin America or Africa, for example, or Central America or Southeast Asia. That's what it's going to feel like. And there's going to be, of course, the very, very wealthy that are going to get wealthier and wealthier, and that's normal in the fiat currency system. So with that, let's quickly look at where the markets are this morning. It's 8:52 a.m. London time. So spot gold, yes, they've been able to keep it below 1800 for the last couple of days, and they're still doing it this morning. It's down $10 at 1785.60. Don't forget, this is London trading now, so they're very busy. The central bankers, the LBMA, the Bank of England, the BIS in Basel. But what's interesting, I wanted to show you, are the Japanese buying gold? Because if you look at this chart of gold in Japanese yen, we're above 200,000 yen, and it looks very bullish. I know the yen is fairly weak versus the dollar, but I think Japanese investors are piling into gold. So I just wanted to put that out there. So what about silver? Well, silver is getting hit as well. It's down 18 cents at 23.32. At least it's holding above 23 now. The high has been 60. The low has been right around here. The Dow futures is up 1/3%. S&P future is up 1/4. And the NASDAQ 100 futures up about 1/8%. The FTSE is up 7 points at 72.20. And now for the currencies. Sterling is up 0.4% at 137.27. The euro is up 1/8 at 116.11. So you would think weaker dollar, gold should be higher, but not necessarily because gold traded at an all-time high back in March 08, at just above 1,000. And the dollar index was at 70. And here we are 10 years or 13 years, sorry, later, and gold is at almost 1,800 and the dollar index is in the 90s. So over time, they don't really move really in any particular correlation. Maybe in the short term they do, but I think what's hurting gold right now is the fact that the dollar is so strong against the yen. Dollar is up 0.4% versus the yen at 114.13. Dollar though is down about 0.2% versus the yuan at 642.40. Some of the other currencies, Aussie dollar is up 1/10 at 72.23. The dollar is down 1/4% versus the Canadian dollar, 123.38. And the Kiwi dollar is up 1/4% at 70.52. So what about the commodities? Well, we're continuing to see a strong market in crude. WTI crude is up over 1%. We're almost at 82 now, 81.77. High-grade copper is up 0.1% at 461. We've got natural gas up 1% at 582. So I still think energy, oil, and gas are going to be a big indicator for this great commodities bull market. Eventually, of course, gold and silver are going to do like, I mean, it's going to be the greatest bull market in gold and silver as well. or the greatest bear market in fiat currencies, or even a fiat currency collapse. And right now, I think the only thing that's keeping things slightly under control for the powers that be is that they still have control of the bond market. So the 10-year yield, for example, is still relatively tame. It's at 155. Yes, it's up about three basis points today. But with where CPI is, with where commodities are, with the talk of tapering, maybe the markets don't believe the Fed. I mean, this should be over 2%, I would say, the 10-year yield. In the UK as well, it's a joke that our 10-year yield is just above 1%. We were around 1.25 a few days ago or earlier this week. Right now, the 10-year yield in the UK is at 108. It's up 4 basis points. And I saw that a couple of Bank of England MPC members kind of backtracked on the rate rises yesterday. They're trying to make sure that yields stay under control, because rising yields of UK government bonds are going to be a disaster for the economy, for mortgage costs and everything else. Not to add on all the other problems we have with rising cost of living, rising taxes. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.